Good afternoon, traders. This video has been recorded on September 13th, Monday, 2010. Quick disclaimer: futures trading is very risky and can cause substantial financial loss. This video is strictly for educational purposes and should not be considered as a recommendation. First chart up, traders, is the ES monthly chart. This is a monthly chart of the S&P 500 and covers a 13-year period from 1997 to 2010. As you can see here, S&P topped out back in the 2001, topped out in the high 1500s, had a correction back to the low 700, 650. From there, which we found support and rallied back to the high 1500s in 2008, 2009 before getting a correction back to the low 650, 700s level. So far, when we found support in this low 700, 600 levels back in 2002, 2003, we will have something more like a parallel channel that developed and gave us the massive rally to the high 1500s. In that parallel channel, what we had developed was something more like a bull flag in this area that found resistance into the 1140s, 1150s level. When we were able to break out of the 1140s, 1150 levels, we had something more like a massive 300-point rally after that to the high 1500s. As you can see right now, we're currently testing something similar to what we had back in 2002, 2003, developed in 2009, 2010. We have the same parallel channel that's developing. We have something more like the bull flag that's developing in the parallel channel. We're currently testing resistance in the critical area that we were testing resistance back in 2002, 2003, which is the 1140s area. So critical levels to look out for in the S&P 500 would be the 1140s, 1150s. If we're able to clear out of this area, we could possibly see another massive rally back to the high 1500s, possibly even higher. Let's take a look at the daily S&P chart to see what's developing in that chart. In front of us is a daily S&P chart. As you can see, S&P in April topped out in the high 1200s, broke down when we had the massive drop back in May. S&P started to look bearish back in May. From there, we had something more like a head and shoulders that was developing. This is what we had. This is the head. This is a shoulder. And right next to it, this is the shoulder. But when we had that shoulder, things in the chart started looking more and more bearish. S&P had more breakdowns. But now, the head and shoulders that we had developed is more looking like an inverted head and shoulders. If you take a very close look at it, traders, this is what we now have is an inverted head and shoulders, traders. In that inverted head and shoulders, we have a bullish parallel channel that runs high to the highs but faces resistance at the 1126 critical levels. Right next to that inverted head and shoulders, we have another inverted head and shoulders that's similar to this, just a smaller version of it, that from the head we have a rally to the right shoulder and tops out faces resistance. But as you can see, in this right shoulder, we took out this level and now we are now out of the right shoulder and currently testing critical resistance back where we were back in August and back in June. Same level resistance we're testing. If we're able to take out this level and take out the 1140s level, we could get a possible nice rally in the stock index futures. Let's take a look at the Japanese yen chart, traders, and see what's going on in that chart. The Japanese yen so far has been in a nice 6-month rally. Stayed within a nice parallel channel. Hasn't took it out the parallel channel. We took it out probably once when we had the big drop back in May for the S&P 500. The Japanese yen gave a nice rally back in May, broke above that parallel channel, got right in the parallel channel and stayed in the parallel channel over the last 5-6 months, and it's still within the parallel channel. We continue. So as for the yen, we will continue to remain bullish on the yen simply because it's in a nice parallel channel, trading higher, making new highs. I would expect the yen to continue to follow the same trend and make higher highs. If you take a look at the indicators, we have our slow stochastic indicators, our fast stochastic indicators. Indicators are still bullish, remain bullish, and I think will continue to remain bullish over the next period of time. As you can see, we have the same trend that is very consistent in the yen. It stays in a nice parallel channel. It might break out of the channel maybe about once or twice, but it finds its way back in a nice parallel trend line. Same thing right here. We have the same thing in a nice parallel trend line. Takes it out just about once or twice and gets right back in the parallel trend line. You see the same thing here. We take it out once or twice, get right in the parallel trend line, and we continue to rally. So for the yen, we will remain bullish on the yen. For the S&P 500, Key levels to look out for will be the 1126 area. If we're going to take those areas out, the next level will be the 1140s. If we clear those levels, we could possibly see a nice rally going into December, Christmas time. We could get as high as possibly 1200 or higher. So key levels to look out for in the S&P. Definitely watch those key levels, traders. Pull your charts, do your analysis. If you have any questions about my analysis, definitely give me a call at 209-271-3269 or send us an email at lotto@eminitradingroom.biz. If you have any charts that you are willing to share with us, send us your charts. Or if you have any kind of confusion in your charts, definitely send your charts over. We'll take a look at the charts together, and let's dissect these things together, traders. Okay, so have a good trading week, traders, and we will see you back in the trade room.